Texas real estate was booming, but now, it's busting. Across the state, the real estate market is on the decline, and in some towns, prices have crashed by more than $90,000, with some areas seeing drops as steep as 47%. Imagine losing six figures before even unpacking the boxes. Mortgage rates hovering near 7%, skyrocketing insurance premiums, and swelling housing inventories are rewriting the real estate rules overnight. Which Texas cities are being hit the hardest? Could this be the best opportunity in years to purchase a home for pennies on the dollar? Stay tuned. Today, we're diving into the top 10 Texas real estate markets that are crashing at record speed. Number 10. Ozona, a small Texas town, is now facing serious housing market pain. Known as the biggest little town in the world, Ozona is located in Crockett County and has a tiny population of around 3,200 people. What isn't tiny, however, is the price drop. In 2022, the average home price in Ozona was about $190,017. Fast forward to 2025, and it has plummeted to just $100,020. That's nearly a 47% crash, like cutting your sandwich in half and someone still taking a bite. What's causing this? First, the local economy relies heavily on the oil and gas industry, which is extremely volatile. When oil prices drop or drilling activity slows, towns like Ozona feel the effects immediately. Combine that with rising interest rates, which, in 2025, hover around 7% for a 30-year mortgage, and fewer people are eager to buy, especially in remote, single-industry towns. Ozona's median household income is just $46,000, significantly lower than the Texas average of $73,000. With limited job opportunities outside oil and gas, fewer young families are staying. Remote work also hasn't taken hold here. This is the kind of town where you need to show up in person. Housing inventory is ballooning. Listings have surged over 35% in the past year, and homes are sitting on the market for an average of 112 days, double the time they did in 2022. It's a recipe for price cuts, desperate sellers, and bargain hunters circling. In 2022, buying a house here might have cost you nearly $200,000. Now, in 2025, you could snag one for barely six figures, less than the price of some fancy pickup trucks. For investors looking for cheap real estate, Ozona is a flashing neon sign. But for homeowners, it's a tough, sinking feeling. Number 9. Sweetwater, a charming West Texas town of about 10,500 residents, is best known for its famous Rattlesnake Roundup Festival. But right now, the only thing rattling is the housing market. Back in 2022, Sweetwater's average home price was around $140,525. By 2025, it has dropped to $115,554, a hefty 25% decline. What's driving this downturn? A big factor is outmigration. Many younger residents are leaving small rural towns like Sweetwater for larger metro areas such as Abilene or Dallas. The local economy is a mix of wind energy, agriculture, and oil, all of which are cyclical industries. With oil prices dipping in late 2024, job stability has taken a hit. Meanwhile, mortgage rates above 7% have priced out many local buyers. Sweetwater's median household income is around $48,000, making it hard for many families to afford even $100,000 homes with today's higher monthly payments. Investors are also pulling back. There are fewer Airbnb or rental opportunities here compared to more tourist-heavy areas. Inventory is another red flag. Sweetwater has seen a 40% increase in homes on the market over the past year. Average days on market have jumped to 97 days, and homes are sitting unsold, with more sellers than buyers. Prices are being slashed quickly. Here's a revealing stat. Back in 2022, you needed about $1,100 per month to cover a mortgage on an average home. In 2025, that number is closer to $830 per month, cheaper, yes, but with fewer people willing to commit. For locals hoping for appreciation, it's a waiting game. But for bargain hunters, Sweetwater's downturn could be an opportunity. if you're ready for small-town life. Number 7. Galveston. Galveston, known for its beaches and historic charm, was once one of Texas's hottest vacation home markets. In 2022, average home prices were about $380,250. By 2025, prices have dropped to $330,987, a 13% decline. What's driving the downturn? Insurance costs. After several active hurricane seasons and growing flood risks, homeowners' insurance premiums have soared. In 2022, typical premiums were around $3,500 per year. Now, many homeowners are paying $7,000 or more, some even paying more for insurance than their mortgage. Galveston's economy heavily relies on tourism and short-term rentals. But with domestic travel spending slowing in 2024-2025, and new short-term rental regulations in place, investor demand has cooled. Listings for beach houses have spiked, with inventory up 29% year-over-year. Higher mortgage rates have also pushed out second home buyers. Many of them used adjustable-rate mortgages, ARMs, in 2022. As those rates reset higher, some owners are selling fast to avoid negative cash flow. Galveston's median household income is around $58,000, but home prices remain well above what most locals can afford. This makes the market highly dependent on out-of-town buyers, who are now increasingly cautious. Fun fact: in 2022, the average monthly mortgage on a $380,000 home was about $2,500. Even though prices have dropped, current interest rates mean many buyers are still paying around $2,300 per month, and that's before taxes and insurance. In short, Galveston's coastal charm remains, but financially, this market is facing stormy waters. Number 6. Big Spring. Big Spring, a town with a name that sounds massive, is watching its housing market shrink fast. In 2020, the average home price was about $188,450. By 2025, that number has fallen to $145,554, a massive 23% drop. Big Spring is a classic West Texas oil town with about 26,000 residents, and its fortunes are closely tied to the oil and gas industry. The year 2024 wasn't kind to energy markets. With oil prices falling and fewer rigs active in the Permian Basin, layoffs and pay cuts have hit the local economy hard. The median household income in Big Spring is around $53,000. Add inflation, stuck around 4%, and rising costs for essentials, and fewer families feel financially secure enough to buy. Combine that with 30-year mortgage rates near 7%, and even financing a $150,000 home feels like a stretch. Supply is another issue. Housing inventory in Big Spring is swelling like a balloon at a kid's party. Listings are up 42% year-over-year, and homes are sitting on the market for an average of 108 days before receiving serious offers. Almost double the average from 2021. The kicker? Even though prices have come down, the high interest rates mean monthly payments haven't dropped much, and affordability remains elusive for many would-be buyers. Number 5. Port Arthur. Port Arthur, located along the Gulf Coast near the Louisiana border, is another Texas city where the housing market is taking a nosedive. In 2022, the average home price was around $115,340. By 2025, that figure has dropped to $91,755, a 20% decrease that's being felt across this industrial town. Port Arthur's economy is heavily reliant on petrochemical refineries and shipping. While those industries bring in solid revenue during good times, they're also extremely sensitive to global oil prices and environmental regulations. Over the past couple of years, tighter emissions rules and declining oil demand have impacted operations, leading to layoffs and slower hiring. The median household income in Port Arthur is just under $42,000, and many residents are struggling with the increased cost of living. Property taxes in Jefferson County rose by about 7% in 2024, and insurance premiums are climbing quickly due to the area's exposure to hurricanes and flooding. In terms of real estate activity, the market has cooled drastically. Inventory is up 36% year-over-year, with homes lingering on the market for an average of 101 days, up from 68 days in 2022. Buyers are harder to find, especially since many investors are turning away from coastal markets with high climate risk. While the drop in prices might sound like a good deal for newcomers, the reality is that monthly mortgage payments, once around $880 in 2022, haven't fallen much thanks to the interest rate staying close to 7%. Affordability remains a key issue, and the market's downward trend doesn't show signs of stopping unless major investment returns to the area. Number 4. Lubbock. Lubbock, a larger West Texas city and home to Texas Tech University, has always had a steady housing market. But even here, the cracks are beginning to show. Average home prices have dropped from $256,800 in 2022 to $221,100 in 2025, a decline of nearly 14%. Why the slide in what was once considered a stable market? First, student housing demand has softened. Post-COVID enrollment patterns have fluctuated, and more students are attending classes online or commuting from home, leading to less demand for off-campus rentals. That's left landlords scrambling to fill units and dropping prices in the process. Lubbock's economy is still anchored in education, agriculture, and healthcare, but none of those sectors have been particularly strong over the past year. Combine that with a growing housing inventory, up 30% since mid-2023, and there's more supply than demand. Even though Lubbock has a relatively high median income for West Texas, around $60,000, many households are stretched thin. Rising food prices, healthcare costs, and student loan repayments have limited the amount people are willing or able to spend on housing. Homes that used to sell in 45 days now take over 90 days to move. Sellers are increasingly offering concessions, like covering closing costs or throwing in home appliances, to attract buyers. It's become a buyer's market, but many buyers are still hesitant to pull the trigger, waiting for interest rates to drop. Lubbock may not be crashing as hard as rural towns, but the trend is clear. Prices are falling, homes are sitting, and the boom times are definitely over. Number 3. Killeen. Killeen, located near Fort Cavazos, formerly Fort Hood, is a military town that saw massive growth during the post-2010 housing recovery. However, between 2022 and 2025, average home prices have fallen from $270,130 to $226,775, a 16% decline. The area's housing market is closely tied to the fortunes of the base, which supports more than 50,000 active duty personnel and their families. When deployments and transfers increase, so does housing turnover. Lately, the pace of permanent change of station (PCs) orders has slowed, which means fewer families are moving into the area and snapping up homes. Killeen's rental market has also softened. With more military personnel opting for on-base housing or renting off-base instead of buying, investor demand has cooled. Homes that used to be solid rental properties are now empty, with landlords undercutting each other on rent prices to fill units. Another challenge is affordability. Killeen's median household income is around $55,000, which doesn't stretch as far in 2025 with high interest rates. A monthly mortgage payment that used to cost around $1,600 is now closer to $1,900, pricing out many first-time buyers. Inventory has climbed over 38% year-over-year, and the days on market average has doubled since 2022. New home construction hasn't slowed fast enough, meaning there's more supply than demand, and builders are offering steep discounts to move inventory. While Killeen remains a strategic location with long-term potential, short-term pain in the housing market is hitting hard. Number 2. Tyler. Tyler, known as the Rose Capital of America, is a picturesque East Texas city that saw explosive growth during the early 2020s. But now, the bloom is off the rose. Between 2022 and 2025, average home prices have dropped from $290,430 to $242,780, a 16% decline. Tyler was once a hotspot for retirees and remote workers fleeing big city prices in Dallas or Austin. But with remote work cooling off, many of those buyers have disappeared. Retirees, facing reduced 401k balances due to market volatility, are also holding off on major purchases. The city's median income is around $60,000, and while it's higher than some rural areas, it's not enough to keep pace with rising living costs and 7% mortgage rates. Many younger families are opting to rent instead of buy, especially as new apartments continue popping up around the city. Tyler's housing inventory has grown by 35% since 2023, and homebuilders have started pulling back after overbuilding during the 2020 to 2022 boom. The result? Homes are sitting longer and selling for less. Average days on market are now around 93 days, up from just 52 days in 2022. Sellers who bought at the peak are now facing tough decisions: cut prices drastically or rent out their homes and wait out the slump. Either way, Tyler is no longer the sure bet it was just a few years ago. Number 1. Brownsville. Topping the list is Brownsville, a city on the southern tip of Texas near the Mexico border. Once considered a hidden gem for affordable housing and international trade, Brownsville is now leading the crash. Average home prices have dropped from $203,750 in 2022 to $165,900 in 2025. A staggering 19% fall. The biggest driver? Economic uncertainty and border policy changes. Brownsville relies heavily on cross-border commerce, and stricter immigration and trade policies since 2023 have hurt local businesses. Unemployment has ticked up to over 6%, and many families are struggling to make ends meet. Brownsville's median income is just $41,500, one of the lowest in the state. Rising property taxes and inflation have pushed more people into renting or relocating entirely. Housing inventory is up 44% year over year, and the average days on market now sits at 115, nearly triple what it was during the boom. Builders and sellers are desperate. New construction is being halted mid-project. Incentives like zero-down loans and buyer-paid closing costs are common. Yet even with these perks, buyers are scarce. The real estate correction in Brownsville is sharper than in any other Texas city. If you're an investor with patience or a buyer willing to bet on a long-term turnaround, there could be bargains. But for now, Brownsville's housing market is ground zero for Texas's real estate slowdown. As we've seen, the Texas housing market is going through a major correction in 2025. From struggling rural towns to mid-sized cities once considered safe bets, the crash is unfolding in unexpected places. High interest rates, overbuilding, stagnant wages, and shifting economic trends are all playing a role in driving prices down and pushing sellers to the edge. For homeowners, it's a time to stay informed and make smart financial decisions. For buyers, especially those with stable incomes and good credit, this could be a rare opportunity to purchase property at a discount, if you're willing to weather the volatility. And for investors, it's more important than ever to do your homework, understand the local economy, and focus on long-term value instead of short-term gains. One thing is clear: the Texas housing market of 2025 is not the same as it was just a few years ago. Whether you're buying, selling, or simply watching from the sidelines, now is the time to stay vigilant, adapt, and prepare for what comes next. Call to action: if you found this breakdown helpful, don't forget to like, subscribe, and turn on notifications so you never miss another deep dive into the real estate trends shaping your future. Let us know in the comments: are you seeing prices drop in your city? Would you buy in any of these Texas markets right now, or are you staying on the sidelines? Thanks for watching, and we'll see you in the next video.